Today I'm going to speak about Netflix. They've fallen in the futures of 10% after the Q2 earnings. Today I want to present to you key information for you to decide whether you should buy on the fall, wait, or sell. So stick with me on this video and I'm going to share with you my findings to help you on your investment journey. See you soon. Wow! It's fallen 10%. I am half an hour before the market opens to see how far will they fall or will they recoup. But end of the day is back to basis fundamental of why the bullish indicator trend has stopped here. What's going to happen in the next few weeks, what's going to happen in the future of the company. So we've come to the right place. So Q2 earnings by Netflix. As we know, Netflix has soared from the likes of 250, 300 before COVID all the way to almost 550. They almost double or even more the share value. Great companies for very obvious reason. Lockdown around the world, there's no sports to watch, there's nothing else to do but people are watching TV. Netflix streaming devices. And the fact that Netflix are producing awesome original content that people cannot catch in the cinema on a Friday, Saturday night in the original places where you are. You might be in Taiwan, you might be in South America, you might be in Europe, you might be in America. You get a new movie to watch based on your regional popularity. Their subscribers has gone over 10 million additional subscribers for this quarter earnings, beating the target of 8 million subscribers. And the fact that the revenue has blown about 62 rather than 60. So it's incredible. And the only thing that's downside is the earnings of 1.5 per share, but they were expected for 1.84. So 6.1 billion in revenue. So that's way disappointed. So point number one is disappointing on the per share and revenue. And point number two is the future forecast, that they don't seem to think that might grow more than what they invested. But again, Netflix has always been very conservative with the targets. But where we are as Netflix is quite a mature company compared to what we've seen back in 2006, 7, 8. So it's a different way. It is a beast, but will the beast keeps growing. So in this feature presentation, I will be going through three key areas. Okay, the three key areas will be the fundamentals, technical analysis, and also the valuation, which I think is very important for everyone. So stick with me all the way through the video. I think the whole video here, my homework, will really help you in your journey. If you like all the amazing thumbnails and all the graphics that I create for my YouTube video, it's all done by CANVA. So if you click on the link below and join CANVA, if you're a one-man band or if you've got a project or you've got a small business, CANVA is a really amazing tool. I've used it for the last 3 years and it's really boosted my journey. So click on the link below and join the CANVA family now. So to the basic fundamental, okay, the first one, basic fundamental. Let's go to the global growth. This chart here, okay, this chart here, weekly global paid net. So the future forecast is Q3. They think they might grow from 26 billion all the way to above 28 million. You're going to add 2 more million. So it's a forecast. But as you can see, 2020 has just beaten 16, 17, 18. The growth has just jumped exponentially because of this freakish COVID-19. Okay, so if you check my stock card, which I use on my investment to quickly help me digest information. So on stock card, if you can see, the growth is fair growth potential. It is not Netflix back in 2015, 16, 17. So it's starting to slow down. P ratio is starting to slow down. Strong operation. There was strong operating margin going from 16% to 18, 19, producing more content, they're spending more money, which is good. Outperforms the market by a margin. Their rivals like Disney, Hulu, Roku, AT&T, they are the best in the market. Outperform, as you can see, fair share price. So the fair share price, what do they mean? Fair share price in a company like this, growth company, is basically, if you look at the next slide, it's based on several multiples ratio. Netflix may be overvalued. Yes, Netflix overvalued because people pay for their future value. That's what you do. You invest in Netflix today, you pay for their future value. And analyst consensus on the fundamentals is 16 well-known authorities are saying it's a buy, 11 says a hold, and 4 says it's a sell. So this is me on the fundamentals. And just to further add, you have to know that with the lockdown starting to ease up, sports are starting to come back, people are starting going to concerts, so people might not spend as much time watching Netflix. But then again, Netflix business is based on subscription. You pay regardless how much you watch, you pay for a fee. Now, on the second part of 3, we want to go to the technical analysis, which is very important. It casts out all the emotional decision making by going technical analysis. So I'm going to bring my chart again. When I say again, because I spoke about it on this video about 3 weeks ago about Netflix, I'm just going to carry on what I said previously. So as you can see, Netflix has been on a bull run since March. You can see all the buy, because there is a trend. A trend when there's always a bearish engulfing, when it drops, taking, relieving valve, I call it. It drops a bit and then momentum picks up again. It drops a bit and then momentum picks. So it's been swinging. And now we're reaching at the top where it drops. But we're standing at the point where, is it going to be a bullish engulfing or bearish engulfing? Or is it going to go down the way, triggering a sale, a mini bearish mode, or a prolonged bearish mode with the markets, with the lockdown opening up? Screen here, I have drawn 2 lines. Making your life easy, I have drawn 2 lines where around about 475, just below just above 450, and another mark just above 400. I think these are the 2 strong, very strong support line. I don't see Netflix going any further than this 1 or 2. In fact, will they go lower than 2? It depends on the sentiment. If the markets are starting to rotate, we might see a bit of fall. But I think round about that one region, about anything above 450, close enough to 450, I think it's a good first buying point. That's what I think. If you want to get into Netflix, that's what I want to emphasize. And also other indicators, you need to look at the RSI and the stochastic. They will start plummeting down. They're going to start going towards the below 50 region. So take a look before you buy. Open up the charts, have a look where you are on that day when you can afford to buy, and see where the support lines, as I've shown on this script here. And then you can decide if you want to buy, hopefully to own Netflix for the future. But for those who has bought Netflix early, should you take profits? Of course, if you want to take profits off the table, take profits. There's nothing wrong in taking profits. If you have the guys have bought in the likes of 250, 300, early 300, mid 300, nothing wrong taking profits. Rotate your stocks into somewhere else. It's nothing absolutely wrong with that. End of the day, if you're a long-term Netflix investor, then hold and buy some more. But if you are just a speculative investor, thinking they're overvalued, then take some profit off the table and then buy in another day, because I think there might be at least a week or 2, or at least some slowdown of their momentum growth. That is the key point I want to make on my technical analysis here. Still looking for a broker? Don't wait. Join Hargreaves Lansdown. I use it for my family, my pension, the kids' investment, all in one basket. It's a really good company, great security, amazing products. You'll not regret it. So join Hargreaves Lansdown today. Okay, now let's go on the valuation. So for my valuation presentation this time, I am going with a lot of facts, lots of maths, lots of engineering. Okay, just to help you guys on your journey. This chart here is the latest EPS ratio, earnings per share ratio, which is very important. It helps me forecast what I expect next. So as you can see, the forecast as what we got, 1.5 next, what they achieve. Okay, Q3 2020, they are expected to go 2.09. That's a huge jump. I think it's really ambitious growth, which I think they're very conservative as well, so they might hit it. So I will look at next quarter, Q3, Q2, Q1, and Q4. So 4 quarters combined, and I will use the Graham's calculator intrinsic valuation formula, as you can see here. Intrinsic per share is equals to EPS multiply 8.5 plus the growth, and divided by 10 years government bond rate for the US. So that is the calculator that I use myself on my spreadsheet, and that's how I calculate it. But there are 4 points that I would like to present why investors might be in 2 minefield. Okay, EPS is 6.55 for the last 4 quarters that I mentioned, for the Q3, Q2, Q1, and last Christmas. So we're trying to forecast the future value after Q3. That's why you're investing now. We're sitting here now. Is it going to grow even further? What are the valuation? What are we paying for? How much are we paying for overvalue? So it's all down to the growth. If you go to Yahoo Finance, the last growth for for Netflix is about 35%. That's explosive. It's quite freakish because of COVID-19. But because of the slowdown in the reporting, it sounds like they're slowing down. But how much? How do you quantify that? I think it could be X. You think it could be Y. So I'll let you decide. But I'm going to present the 4 cases here. Growth of 20%, 25%, 30%, and a very ambitious 35%. Okay? So with this growth ratio, pumping in the formula, you will get 4 different price for the company. So at 20%, if you think growth is slowing down, the intrinsic value per share with the optimistic current bond rate of 3, it's $465. And you'll be 5% overpriced after the sales today. So if investors think they're slowing down, they're not growing as much, 20%, that's why it's dropped in value. They might drop even below at about 460, 450 area until they show investors confident. But if you think, no, they're not going to slow that down, 25%. If you think 25% is the growth forecast, then the intrinsic value is $562 per share. So there's still a bit up room. So maybe before the earnings, they hit 156, people were thinking the growth was at 25%. That is where they are and hoping to see more. But then if you're the ambitious one, you think it's at 30, it will still grow. It will still grow. You know, COVID-19, second lockdown, whatever reason that you think of, you'll be at 658. That will be their future forecast value. 658 at the current PE ratio with growing PE ratio as well. But if you're ambitious saying, no, it's not going to stop there, it's going to be rocking 35%. That's the reason why this is the future value, 754. That's why people are pumping it up. Because if people think that the growth forecast is 35%, there you go. Future value is 754. So this are what I've shown here on the chart of 4 different growth. It's for you to decide which one you prefer, which one you think, which one of the fundamental, technical, and valuation combination that will outcome your decision making. So I hope this helps. So this is the end of my presentation now. This is the end. I'm still in 2 minds whether I should buy or not to buy. But for my experience looking at Netflix for the past 8 years, they are not as big as they were in 2018, the huge potential growth. But then I know Netflix is a resilient company. They're always coming, they're always fighting back. And their goal is to cut cord. They've cut cord in America and they will be trying to cut cord everywhere else in the world. Will that help? Will that happen? We don't know. It's for us investors to see and feel. So I hope this helped you in your investment journey. I hope all this facts helps you decide what to do, where to go. But please do your own research. It is my research, sharing that with you openly. And please do join me in future again for future videos. Please like and subscribe to help my channel grow. Join me on Facebook. That I post things up every time. It's a lot easier on Facebook. Or if you want a closer, more intimate one-on-one session, or if you want more information that I share on a personal basis, Patreon is the place that I'll be. So this is me. I hope you enjoy this and see you next time. And leave a comment below if you decide to buy, hold, or sell. I'm really keen to know. I'm really keen to interact with you guys. Alright, take care. Catch you soon.